This is Justin Pulitzer. This is my weekend review for Sunday, October 30th, 2016. It is, however, being filmed on Saturday. Anyhow, there's a bunch of stuff I want to go through. I'm going to start out with my economic outlook based on some of the reports we had. I'm going to discuss the Friday volatility with the Hillary Clinton news. I'm going to get into the 7 market keys, talk about the major market indices, and then hit up a few of the momentum stocks and important stocks that I follow. Anyhow, let's get into it. Just on a more of an anecdotal note, not necessarily so quantitative. I mean, I've lived in New York City for most of my life, for all of my life, and I've noticed the city go through ebbs and flows, and I'll tell you, recently, within the past few months, and even more so accelerating now, I don't think I've ever seen more homeless people, particularly in the subways or in doorways. There are beggars off the highway overpass exits. And the economy, you could just feel it. Things are not going very well. So when Janet Yellen talks about running a hot economy, I mean, it's almost fanciful because there is no hot economy. Things are not doing well. I've had plenty of friends who had to move out of New York because they couldn't afford to live here. I'm seeing some of that trend start again. I'm starting to see some of the signs of, I wouldn't say necessarily the beginning of a recession, but potentially, but definitely a bit of a slowdown, particularly in potentially some of the real estate prices. Anyhow, we had a durable goods number that was a miss again. They had a bit of a uptick in the August number, but not really good. Again, lack of business investment. In capital goods and so on and so forth. That was also kind of echoed in this is the durable goods order. Military aircraft were a bit lower. That was an important component, but commercial aircraft did well, hence the move in Boeing, which I'll talk about in a little bit. We had a GDP number. It was quote-unquote a beat, although honestly, if you go back to, you have to go back to 2014 for there to be a kind of a comparable read. This was boosted by soybeans. Apparently, we're shipping a lot of soybeans. They actually showed a little bit of an uptick in business investment there, which I guess is somewhat positive, although that kind of countermands what we saw in the durables. And then, again, what I was talking about with real estate, there was residential investment was down a bit. Keep in mind, the real estate boom started to dissipate in 2005, and by 2007, the end of 2007 was really when, oddly around this time of year, actually, October, November, was really when the downturn started, which of course led to the 2008-2009 crash. That's another story, though. And the jobless claims, they seem to be continuing to drop. This was the sample survey, so maybe we get a decent jobs number this Friday. The important thing to be watching this week, though, is going to be on Wednesday, which is the Fed day. Nobody really seems to be anticipating a move in November. Seems that we're about 10 or so days out. That'll be basically under a week from the election. I just can't see the Fed moving, particularly at this time. The December meeting, however, is another story. It's forecast at about 68% currently. Based on the economic data that I'm seeing, the Fed should not move. Will they? That's another story. Last year they moved in December, and after that there was a pretty decent-sized smackdown in the market because, once again, the Fed would have been using the calendar to tighten into a slowing economy. The Q1 of the last 3 years or so has been very, very slow. It just doesn't make sense to me that the Fed would want to do that. There's a lot of contradictory discussion out of the Fed. Yellen seems to be more on the dovish side. She was talking about running this hot economy, but they haven't reached their employment levels that they said that there's still a little bit more room. There really isn't any significant wage growth. So the reason for the Fed to really hike is because there's wage pressure and because they're dealing with a robust economy that needs cooling. I'm still waiting for. I mean, to me, this is like they're still heating the flu here. I mean, there's no robust economy. There's no runaway inflation. The only inflation is in this in healthcare costs, and I don't want to get too into that. But that has been a real jobs killer, and you can see Obamacare is basically blowing up in front of our eyes with. If you're lucky, you have a 20% premium increase. Some states have 50, 100% increases. So this is definitely going to be eating into incomes, and I just can't see that being good for the economy. Anyhow, let's get into. That being said, so Wednesday, the Fed is going to give a statement. I think if they're going to go in December, they are going to be explicit. I'm hoping at least that they're going to be explicitly clear in their November minutes. So I keep giving the analogy. It's sort of like porn. I'll know it when I see it. So I will read through their minutes thoroughly and report back to you all. Anyhow, or if you want to have a southern draw, I could say y'all. So the VIX. So we're in this kind of higher lows situation here. We started to have that here, and of course we knew that led to the flash crash, or really one of the flash crashes. I'm not necessarily sure we're going to get that, although it is possible. We are getting, like I said, rising volatilities. We are testing downtrend lines. If this were to kind of explode higher, and I do believe we had a close over the 200 MA, which is never a good sign, I think that would be targeting the lower 20, kind of like the 21s, the backside of this old up channel. Sometimes I keep my charts. A lot of people criticize me for keeping older levels, but I believe the market has, like exercise, has muscle memory, and I like to see where things have been even far back as sometimes years. So, yeah, this was we got to one of my price targets here. We'll see if we back off a little bit, maybe get a 50 MA test or maybe even the lower part. But I do think at some point we are going to get an IV pop, at least into the Fed. So I'm going to get into a little bit of a circular world here with regard to the Fed, and just try to bear with me. If you've been with me for a while, you've heard this, but if you haven't, this might be a little fresh. I'm going to try and explain it as easily as possible. So the Fed doesn't really want a strong dollar, but the higher the dollar goes, the more likely people or traders are going to think the Fed is to hike interest rates. So as you see, the dollar has been rising and the market has been stagnating, and the probability of a Fed rate hike goes higher. If the dollar continues in this kind of beast mode higher, that could spook the Fed and make them less likely to hike. So a stronger dollar into the Fed, and I'll tell you, pain trades seem to be, at this point, a stronger dollar and a weaker bonds into the Fed, and then stronger oil into the November 30th OPEC meeting, although we did back off Friday. I'm going to discuss that in a moment. So we're at the upper part of this channel. This has kind of been the range where moves on either side of them have been unsustainable to either to the upside and to the downside. We were spending more time on the upside here, but now we've been kind of spending, I guess, some more time on the downside. It makes sense to me that we're going to back off a bit, at least on the first attempt at it. Maybe there's a little bit of a punch through. I like that Friday reversed. I guess that was really on the Hillary Clinton news that the FBI is reopening their investigation. I'll get into that really when I talk about SPY a bit. But we are now below, basically a full week's worth of trade, roughly around the 10-day moving average. I want to go to the DX for a minute because I did do some measured move calculations on this bad boy, and I will discuss my take on the dollar. So if you take this move, you can see there was a lot of chop in between there, but if you take end ranges, it was a $5.74 rally. So if you project that really off of these lows, that could take you potentially to 99.79. We're getting kind of close to that channel. As you can see, there was a lot of hesitation in that move. So I kind of just put that on. We could spend some time futzing around and then, get into there. But I do think that rallies in the dollar here could be there, and I do think that unfortunately the bias is still up in the dollar. But I think that as we kind of get into these reference ranges, remember when I talk about coming up from the bottom or coming down from the top. We are coming up from the bottom. So it's basically, we're in an up channel, and I think that it will have some muscle memory again into these reference peaks and may back off a bit. I don't think you can have a sustainable rally in the market without the dollar backing the F off. This thing is just going to be a killer to earnings, and the Fed knows this, just so you know. They've mentioned it in their minutes. The Fed is, believe it or not, very, very market dependent. They watch this stuff like a hawk. So that's the story. The bonds, they have been pulling back. It started out kind of gently at first, and now it's accelerating. The good news is that we're getting into some reference levels where I do think that the bonds will likely bottom for at least the time being. And I've said that somewhere between these 125s and maybe 127s, this kind of area, that will still be, a few points down. You have a longer-term secondary trend line there, these reference lows, and we would be basically coming down from the bottom. You have a 61.8 Fibonacci retracement. We're still above the 50% and this breakout. So even as dramatic as this move has been, it's really not crazy. So that's why I don't think the market has really fallen out of bed, although we're starting to in like IWM, for instance, but we'll get to that in a minute. Anyway, as we come down into this area, if we still continue to come down below the 200 MA, like I've said, is vulnerable. I'm going to be looking to sell some out of the money puts as a long proxy. I mean, if this were to really snap, we could come down to 117s, but I just don't see that happening so dramatically quickly, just because if this is coming down like this, the market isn't going to be loving it, so to speak. Remember when I talk about weighted average cost of capital, as bond prices come down, yields go up. That will not go over well in interest rate land. You can see we kind of started the year off down here, so maybe we're going to kind of try and retest that area. I can't tell you, but I can say this. I do think that this area here, at least for the first go-round, is going to be a lot of support, and I'm looking to kind of buy the dip there. This also may get the Fed get their panties in a bunch, so to speak. We are pulling back a little bit in terms of high yield. Really not dramatic enough to kind of really grab the attention of the Fed, but who knows where we are by December. We're below the 50, which I think puts the 100 MA into play. This pattern is sort of, I think there'll be some support down here in the 85s, at least the first go at it, just because we're coming down from quite a range, and there's reference supports in here. Like you could even look here. This is the edge of this kind of volume distribution. If that were to really snap, I think the 200 might be in play, and that at the time would probably be the backside of the old downtrend line, which I do think would be, at least for an initial trade, a right or right out play. That would get a little bit precarious because we would be below the last swing low, which to me is never really where you want to be. You really are looking for higher lows. Anyhow, that being said, I want to keep an eye on this. Below the 50 MA remains a little vulnerable. You can see we spent a little time below there. Didn't spend much time. So as of now, I'm kind of thinking this could be a little bit of a look below, but I'm going to make more of a judgment here based on the 100 MA. If we can't hold the 100, then I'm going to start thinking the 200 is in play. My theme is basically if we lose 50s, we see hundreds. If we lose hundreds, we see 200s. I do like that the 200 MA is arcing up for the first time. Seeing this whole period, this has been arcing downward. We couldn't get above it for a while. We got above it. We've had a couple of successful tests. I would think that a test here, wherever that may be, I would be interested in kind of buying it. It would probably coincide with this area where this volume distribution starts, which is roughly, 84.29 at where we'll see where it is. I think that area would be an area to sell some, at least initially, short-term out of the money puts. Maybe same week or next week expiration. I'd have to see where it is at the time. Oil. All right, so we got into some reference areas. This had been kind of holding up like a bit of a champ, and then we had that news Friday. So if we continue down, we may retest the backside of the old kind of down-ish channel area. You still are above the 50 MA, the 100 MA is below, and you have a channel low roughly around the mid 46s. So I think somewhere between 46s and 47s should quote unquote hold if we're going to remain healthy. Yeah, that's just my thinking. We're seeing a little bit of a back off in Exxon. Chevron seems to be doing okay. I like the idea that the 200 MA is upward sloping. For this whole period of time, it had been down. Here it started to kind of flatten, and now it seems to be decidedly up. So we're still above all the major moving averages. So it's hard for me to get too bearish on oil yet. This was a bit of a look above and fail. Makes sense that we're coming down to retest kind of like this breakout area. So I think somewhere between the 50 and the 100 MA and this channel area is going to be the area to kind of buy the dip, at least for a trade. If it starts losing it, we'll reevaluate. Remember what I said, 50 gets hundreds, hundreds get 200s, and that's also this reference low area. I don't know if this is going to be so cascading, but we will see. XLE still holding up okay. This has kind of been just in this consolidation rising channel. 100 MA has been kind of important. If we lose it, I would be targeting the channel low. But again, look where this is, 200 MA kind of time. This was where the breakdown, we never really retested it, and it's never even retested on the downside. So I would love to do a put ratio, like buy something in here, sell 2 times out of the money here, and here are these reference lows in the 200, which will also be channel low. So we may have a little bit of rough sledding in the XLE for a couple of days. I mean, given the fact that Exxon is trading a little bit more softly, but I think the 200 is a buyable situation. Speaking of situations, you have Exxon. Basically, I had sold some puts down here. We got back up in here. We're consolidating. We may come down and retest. We have a trend line there. We have, well, the back side of this trend line, I mean, it kind of held here. But I think if we're going to come down into Exxon, there's a lot of reference support here. I think that these lows would probably get bought, at least initially. You might undercut them a little bit, but you have 61.8 of the range here. You have trend. You have reference lows. I'm thinking 81s to 82s are probably the area for some support. I like the idea of selling some near-dated, out-of-the-money puts into that zone. Chevron was strong. Can't quite break out, but this seems to be holding well. 200 below. I mean, I like using the earnings day bar. Anything above 105.03 I think could continue up at least to 107s, maybe even to 112s. If we were to lose the low of day 100, if you basically lose 100 again, then I think we are going to at least see the 200 and, in my view, maybe even lower. I'd have to re-examine at that point. I mean, we could even retest some of these moves into like 98s and maybe even 94s, which would make sense to me about it, like a $10 move from the, that high to low. China. All right, so China has been pulling back. That's okay, I think, as long as we hold the 100 MA. Notice we lost the 50. We're coming into the 100. You also have a channel low. Some reference highs here, kind of the breakout area. So somewhere in these 35s-ish, high 35s, low 36s, really needs to hold. That's an important zone. If we start losing there, could be a move even down to the 200, which would not be good. I mean, that would be a problem. That's basically this area. If we were to throw a fib on there, keep in mind we've come up quite a ways, right? I mean, we've been rallying for a while. This is annoying. I think that's roughly about right. I'd have to check the tops, but the 38.2, I mean, just to show how far we've come, we aren't even down to the 38.2. So really not all that much to see here. I don't really like 38.2s to buy the dips. I sort of like them to book profits on bounces, but the 50% is a little bit close to the 200. I don't expect this to be like that dramatic of a move, but you never know with China. So I'm thinking right or right out long, somewhere between the 100 MA and the channel low. And if it's wrong, it's a GTFO. We are coming lower highs, a little bit lower lows, so I am a little cautious. This is a bit of a rollover pattern. If we were to lose this, I would be out and probably playing short for a move to the 200 and maybe even the 50% fib. BABA, I mentioned up as we got close to the 110s, there would be issues, and we are coming back. We're now kind of closing. Did we close below? Let me take a quick look here. That's the fibs. That's not good. We don't want the fib. And we're frozen. I canceled an alert on BABA. That's annoying. All right, so that was the problem. All right, trend. All right, so if we draw this in, let me tighten this up. I'm still having issues. I got to really do some work on why this charting is giving me problems. This just looks like a little rollover. I don't like that we're below the 50. We've held a lot. If we lose the 50, we could come down to the hundo. That to me would be real interesting, because look where this, everyone I think at that point would be freaking the F out. I'd do my polls and everyone would be bearish, and they would be saying that, you know, I think everyone would be soured on the name. I, however, would be interested in starting to sell some out of the money puts, maybe gap fill puts. We'd be kind of close, right? 92s, be looking to sell like 87s, maybe 85s. Might be juice at that point. This could even roll over to the 86s. Look where the earnings are. Look where the channel low is. That's roughly the gap fill. So if we are to continue down, maybe get a little shake and bake, I'd be interested in selling out of the money puts against the channel low as we start coming down into like these 95s and 92s. That's my take. If we can get back up above the 50, then, you know, maybe we want to come back up and retest the 104s and 106s, but I'm a little cautious. I mean, this could see the 120 at some point, but I'm a little cautious. You know, Amazon reported there was a bit of a slowdown in web services. I mean, China is a little bit of a different story. There's not as much competition in there, but yeah, I mean, you've had some rollovers and some, you know, in Amazon, and maybe there's a little fear in here with this. Baidu reported they initially were pretty good, but the market kind of gave it up late in Friday, so we're roughly around this 50 MA. I like using the range. If you can get back up above the 185.20, I think we'll come back up and maybe retest the 201s. If you lose this, we could come back down and fill the gap. I had said for a while back that this was really just a sloppy pattern, but as long as we held the 100 and the 200 confluence, it was kind of okay. So I'm still in that camp. I mean, I don't like the idea that it kind of gapped and crapped, but we'll see. If we were to lose this area, this would get real ugly fast. I think we'd see the trend with the quickness, particularly if we lose the 100 and the 200 confluence. This would be, I think, almost in free fall. So this is a very key area. I like the idea of a right or right out against these levels, but this is really a choppy pattern. I just don't see any edge in it other than those MAs. IBB, another risk on, risk off type of a thing. We're in the upper part of the range. We lost the 200. It's coming down. I don't know if we retrace the entire range, because keep in mind these were kind of equal highs, and this was the end of that range. We were a little higher, so maybe the 78.6-ish area and this gap fill here around 250, 66, somewhere in between 250 and 253s. I think that area could be some reference support. We're kind of bombed out on the stochastics. We're getting to the upper part here in terms of the this reading here, the exponential, the higher highs, lower lows type of read. And I'm thinking that this might be due for a bounce soon. So I'm looking to see some reversal, particularly if it comes less and less likely that Miss Clinton will win the election. ALKS took its sweet ass time, but after hours we achieved my gap fill price target. It actually got even a few dollars ahead of me. I forget where it was after hours, but it basically was a gap filled here, the 61.8, and is a crap. So I will say this. When a stock gets a 61.8 and pulls back, they tend to hold 61.8 retracements. So 48.60 is the edge of this volume distribution. I'm not sure we get a full gap fill. This was on news, keep in mind. But what I will be doing, and let me zoom in a little bit closer here. The gap was from 43s, 43.51. So as we come into 48.60, I'd be selling 43 or below puts. You have 200 MA support there, channel low, gap fill. Yeah, I think that area in here is going to be, we're already to the 50%. I mean, maybe I'm being a little too, because you have reference highs here and a mini, I wouldn't say it was a bottoming tail hammer, but we didn't close on the dead low. But as we kind of come into this area, I'm looking to sell some out of the money puts at that gap fill region to kind of get back into ALKS. Let's go to SPY. The expected move this week is roughly $3.55. That would take you roughly up to 216s, which is kind of close to the 50 MA, or down to 208.99. Let's just call it 209, which is roughly this gap fill. Let me do a little zoom here. Let's get a little closer. I know I have a lot of levels in here, but these are my real charts. So if you just kind of stay with me on the pointer, I will walk you through it. This was Brexit, just keep that in mind. Look where we came down to, kind of close to there, bounced up. We've been in this kind of consolidation. We've been in multiple consolidation ranges. We're basically still within this one with a look below and fail above. We need to be above the look below and fail high of 213.59. Friday, we did not close there. We closed at 212.54, which is basically right above this kind of breakout here. So we're still kind of in inconclusive territory. I've said for a while that this body and this kind of check back low, this 212.17-ish was key. We still closed above there, so there's really not much that to see in SPY. We have broken the channel, but more so now by time than by price because we're basically into these supports. If this low, let's use Friday's range because that was a big emotion day, right, with the Hillary Clinton stuff. Anything above the 213.93, the high a day, I think we will retest the backside of the old downtrend line and the 50 MA. If we lose the low, which was 211.71, I'm thinking we might finally, at long last, fill this gap and get to the 50% fib, which is roughly 209, which is within our expected move. A couple of things to note here. We're below the 50, which is now downward sloping, not a good sign. We're below the 100, which is leveling out. Anything below the 100, and keep in mind, could put the 200 in play. I'm not saying that 100% happens, but if the Fed, says they're going to go in December, yeah, we could go. I've said for a while now, anything below the 50 MA, which has been resistance now multiple times since we broke down, failed here, one day closed above, again, then right below. Moves above have not been sustainable. Anything below the 50 MA to me, I have to say that the bears have the edge to the tape. So until we reclaim the 50, I am more, I'd say neutral to bearish than I am neutral to bullish. We'll leave it. And I'm more in the kind of neutral to bearish camp, and I'll talk about that in a minute. But we are still holding reference areas. There is a lot of muscle memory between this like 209 to 212. So I don't know that this is going to be like this clean collapse that everybody wants. I think it's going to be more choppy into this area. And like I said, 210, 211, that area was so hard to get through for so long. What was resistance should be support. So we're basically into the, kind of hugging the supports. We banged on it a few times. The more it gets tested, the weaker it becomes. But, maybe there's still a rally in the bones yet, particularly if that would coincide with the dollar. Maybe topping out. I've said for a while that we would kind of maybe double the range to the lows. That would really take you down to the 205s, 206 area, which is the 61.8. So we could be kind of working our way lower. I drew a channel. We're not really able to hold the highs. Maybe we do test the lower end of the channel, which if you take a look this week with an aggressive Fed situation, maybe, the move does really accelerate down there, and we do get that 61.8 test. It could be a little bit of an overshoot of the 200 MA. I will say this: if we do come down here, I would be an interested right or right out buyer. What I'd probably be looking to do here is sell this gap fill, the 203 puts. So if we came into like the 206s, 209s, 206s, I'd probably be looking to do it into stages. I'd be looking to sell the near dated 203 puts, just because it would have been so far so fast that I think that there would be muscle memory. So that's kind of my plan if the move is down. If the move is up, I'd be looking for a right or right out short on the 50 MA. Traders do what works until it fails, until it stops working. That would roughly be the high end of range by the time we got there. So if we cleared through it, hey, it would be just a right or right out situation. But I will say, if we were to get back up above these 2 days, these kind of sell days, this might not resist again. It would be the 1, 2, 3, 4, the fifth touch. Maybe, the fifth touch is the charm, and we would, move back to the upside. So it would have to be a really right or right out short. And if it failed, I would be flipping long pretty quickly, because we would be above the two, this whole range, these 2 down days, and a 50. So that to me would move back to the upside. So that's sort of how I'm looking to trade it. IWM already showing more weakness here. I mentioned that this was a 100 MA failure. We lost the channel. I remember I said the 117.37 would be my kind of first target. If we lose that, here's what I'm thinking. The low end of range here is the box that I drew in is 114.29. Look where the 200 MA is right now, kind of just coming up to the 114s. So if we were to kind of have punched into these highs, maybe we rotate down to these lows. I would be looking to be an out-of-the-money put seller somewhere near this gap fill in 50 MA, which is 109s. It's also kind of the edge of this volume distribution here, 108s to 109s. So if this continues to edge down into the 200, I am a near-dated, out-of-the-money put seller for the time being. I don't really see this repairing itself until it can clear and get back comfortably above the 120.58. If that were to happen, notice I said, remember these double bottoms with the 100 MA? It is broken. Usually a break leads to a retest, so you really need to see it clear and hold 120.58 before this really even starts to repair. So IWM is showing a lot of absolute and relative weakness. Yeah, so let's get into the Qs. This has been the big momentum stocks, the Apples, the Googles, the Netflix, the Amazons, all of that. You basically crossed a downtrend line, gapped 2 days, and then has been selling off ever since. So this was kind of a mini look above and fail. I wouldn't say there's any real meaningful excess, so we're getting a bit of a liquidation break, but we did close below the 50 MA. We're still kind of on the right side of the old kind of, if you even call it a downtrend. This to me just looks like we got to the top end of the range. It just wasn't ready to go. Profit taking, and we're probably going to come back to retest this like 115s area, maybe the 100 MA, wherever that is at the time. I mean, if this really starts accelerating, maybe we get down to the kind of the breakout, the retest of the breakout. But I'm loath to say that we're going to see that just yet, and I'll talk about why in a moment. So this is my thinking here. Anything below the 50, we could probably see the 100, somewhere between the 100 in this area. Probably initially it'll be a right or right out long, just because you've traveled such a long way, at least for a short-term bounce. But have to keep an eye on this. The Qs have been what's been holding up the entire market, and if that fails, really we start losing the 115.75, and this last swing low, we're going to have to start reassessing some situations. Apple. All right, so they reported they came up from the bottom. Initially, it was a pop after hours to 121s, but it wasn't good enough, right? The unit sales were okay, the margins were okay, but it wasn't like a knockout quarter. So there's some good news and there is some bad news. The good news is is that we're still above the breakout. The bad, and we're still confined within the earnings gap day, which was kind of a gap and buy. I was really hoping this was going to gap a little further right to the 50 MA and the breakout, and then it would have set up for a buy. So I don't know if it's going to hold this time. But we do know that there is reference support between the 111s. Remember from way back in the day, the flash crash low was 111.27. I always carry that shit forward. Stuff forward. So this area is really going to be key. The 111s, the 112s, and the 50 MA and the channel. So I think we're gonna get a better idea if the Nasdaq is going to break down probably early next week. If this does snap, I think we could easily see the 109.85 and potentially the gap fill to 105s. I would probably be playing that with either a direct short out of the stock, or with put spreads or put ratios, meaning buy these and sell 2 times out here. Notice the 200 is bending back up. That'll probably be roughly around there by the any time we would get there. This would be a really large move, by the way, in Apple. That would, I think, do it in the Nasdaq. So we got to really watch this 112.39 to 111s area. If that starts giving, I'm thinking 105s. If we were to come back up now above these highs, the 115, 116-ish area, I think we get the gap fill, and then we would reassess to see if it gets there and then backs off hard, if it gets there and pops through, or if it gets there and kind of chops sideways. I do think at some point we're going to revisit those after-hour highs, but I don't know that we don't need to come down lower first, because if they couldn't do it on earnings, and this was supposed to be their, a big quarter with Samsung screwing up, the subsidies coming back into iPhone 7 and all that jazz, when is it going to do it? And I've said for a while, this is going to sound crazy, but they don't have a space program. They don't have something that is new and exciting. That's really what I think that the market wants to see. They want to see something new out of Apple, that they're not just reliant only on the iPhone. I think they should be in service, gaming, whatever, but let's keep it like this. We're getting close to the top part of the channel. We may want to even come back and retest the midpoint of the channel. So, again, a long story short, 50 MA, breakout, key. If we lose that, then I'm thinking 100 MA and gap fill down to the 105. So we might get some real movement this week in Apple. Microsoft got the dot-com bubble high, punched a little higher. I had said I thought we might see the 1.618 fib extension, the 62. It is backing off a bit. I think if this comes down into 58s, it'll probably be which is really the breakout. I don't know you're going to get the full gap fill, but somewhere in there, I would be interested, at least for a right or right out for maybe a day trade bounce. But look, we came up from the bottom of the range. We got the achievement. It makes sense to me that this thing is going to pull back a little bit. If we were to throw a Fibonacci, throw a fib on her, all right, you can see a 50% fib. Basically, I don't know that that's going to be the case. A 61.8 is basically the gap fill of the entire move. So if the Nasdaq does start rolling over, and I'm not saying that it 100% is going to, it may. I'm just sort of trying to put ideas out there with levels that interest me if this stuff kind of starts to go. The 61.8 is the big gap fill, right, from when this all started. So if you're aggressive, below 59.49 is a short, above 40.45 remains a long. So let's keep an eye on this. I would be thinking that initially we get maybe 58, scale a little here, the short, play the rest of the 50, and then maybe hold some chaser to 55s and maybe even all the way down to 53s. My guess is you'd probably come down here, get a bounce to a lower high, could re-short, and then maybe get the full articulation down to those lows. But if we get back up above 60.45, I'm going to be thinking long. Facebook got a bit of a rally on Google. Google reported these tend to trade a little bit in tandem. Facebook is okay. It closed out kind of okay. I'm just cautious that if this rallies into the number, it could be a sell the news event, particularly if we're up near the progression line. Anyone who's followed me for a while knows the progression line is kind of the line of death. So as we get up into there, I'd be looking to book profits. I don't necessarily know that I'd be looking to short, but I definitely would be looking to take profits. The ideal scenario, of course, is for this to roll over, get a trend touch ahead of the number into these reference lows, and then we can use that opportunity to play for a shake and bake long. So I want to kind of do the opposite of whatever Facebook does. I've mentioned for a while the Costanza play. Amazon, I said, had a 411-point run, 222-point pullback. If you projected a 1.618 Fibonacci extension, that would be 833.91. If you projected the entire move, that would be 885.19. I said up here, I disavowed the trade, and it was time to go, and I'm glad we did because this is coming down rather hard. So what now? I don't think we need the 1.272 on here anymore. Oh, we lost my 1.618. I had drawn it in. Anyway, I'll fix that for the next video. Anyway, we're coming back down. 100 MA is going to be key. One of the things I noticed that before we had the full pullback, you had basically about 150-point move lower and then kind of a relief rally. If you were to kind of project that move down, that would roughly be the 200 MA and the breakout of 696.44. So maybe we do get a larger pullback in Amazon. I think that would be an amazing gift going into the fourth quarter because, I think we're kind of living in an Amazon world these days. So I like the idea of put ratios, maybe buying some up here, selling 2 times out of the money over here. You can see this was really where this real last leg took place, the breakout. I think that area, to me, would be a interesting level of Amazon. Let me see if I could draw the fib, and I'm curious to see what that would be. All right, there we go. What was the low here? The good low was 474. All right, so the 50% fib was 660. I don't really, like I said, I don't use 38.2s. Let's just take that sucker out of there. Yeah, somewhere in this range, I'm thinking. The ideal scenario would be for this to take a while to get the trend that coincided somewhere in here. I don't know that it would necessarily take that long. This was kind of quick. I'm bullish on Amazon. I've been really waiting for a larger pullback. Maybe it's time that this thing gets a bit of a reset. I think you can use the 100 MA if you want for a day trade for at least a few point bounce. But if you lose the 200, I'm going to stick with my theme that we get the 200. So it's 100 or bust. Either we're going to hold the 100. I'm sorry for the ferry beeping in the background. I hope you don't hear that. But 100 MA is going to be the key. If we lose the 100, then I think we're going to eventually work our way down to the 200. Netflix still holding up kind of strong, although it got into some reference resistance. I'm thinking that this could have a bit of a pullback. But Netflix was good after earnings. I'm thinking that this may pull back. If you look at the 50% fib, that was like these old highs. So if Netflix were to kind of start to roll over, I'd be interested in selling 106 or below puts. 101s, depending on where the IV is, you probably can get some decent juice in there. So as this pulls back, maybe somewhere into this range, I'd be interested in selling those out of the money puts. I'm really not interested in chasing anything here just because of the overall condition of the market. Google, we ran from the top, we got up to this area, consolidated a lot. So this isn't really as overbought as it may appear. Look at this. This did spend a lot of time here. It wound up kind of coming back. And then this was the last earnings pop and sold all the way back down. I don't know that that's going to be the case in Google, but I will say this. The price action on Friday was very strong until the Hillary news came out. It had been actually making new highs, which to me looked like it wanted to go higher. Wound up closing kind of iffy, a little weak. So I'll say this. The breakout here was 119.06. The low of day was 817. So if we start losing there, I'm going to think the 50 MA gets tested, which would be around 819. what was this, 805, which is also the channel low. But that to me would be a little bit of an issue. So I'm sort of thinking here 819, 817. The low here was 814. So these 18s need to hold. If that breaks, then I'm thinking a right or right out short to the 50 MA. If this kind of bounces up into range, like if Monday were to be like a gap up, the VWAP on that day was 827.33. So you could try either, if you're bearish on Google, a right or right out short there. If it clears, I wouldn't F with it. I would think that that would mean that this really was just on the news, the headline, and we're probably going to go back up higher. So you need to see these 18s, like the 814 to 817-ish area hold. If you lose there, I think channel low. If we lose the 50, then you know what I'm thinking, 100 MA. Which was kind of like roughly this, the lower end of this entire range. But it'll probably have moved up by that time to the lower end of the range. So if this were to snap, I would like a right or right out short into there. But 827, that's it. Google needs to get over 827 for more. Anything below there to me could be a little bit iffy now. Yeah, I do think longer term that Google wants to see the channel high and the 1.618 fib extension up at 895. So anything above 827, I like long. 827.33, I like long. Anything above 839 is an add for the move up here. Anything below, though, the 827 to me, 827.33 remains a little iffy. PayPal, again, another one of these examples of gaps that didn't hold. This really should have continued. Now we're back into the breakout area here. So I'm sort of okay with being long. I've been looking for a load. I didn't have a chance. I was away from my computer at the time, but this 41 to 41.49 is a right or right out long. I like the idea of selling out of the money puts. Either like 39s really would be my strike. You have a 50 MA and the 61.8. It really, in my view, this area is a big point of contention. It's the big volume, kind of where the big volume picks up. So I like the idea on any weakness into selling that. I just hope we didn't lose the opportunity. If this were to be a move on, like, let's say Monday is up and we're up over 41.98, then I think the move is going to be back up, sort of like what happened back in the day with Deere. I don't want to get into that chart because we're running a little over, but I like that. Boeing, durable goods component, commercial aircraft was good. This is pretty impressive. This punch through a long protracted down channel. It's pulling back a little bit. So as long as we're above the down channel, I'm okay with buying the dips. If we were to get back below it, this to me would have been a failed move. It would be a right or right out short, probably the 50 MA, maybe even 100, like the 50, 100 MA confluence. So the pullback day's low was 141.78. And the second pullback low is 142.17. So as long as we're above 141.78, I like the idea of a right or right out long. I would add over the high, which is the 141.7. Let me see, what was this? 146.23, and then I would be targeting the 158s. Yeah, so it seems to me that we're just getting into this kind of resistance here. It might spend some time chopping, but as long as we hold, like I said, the 141.78, I think it's okay. Below there, to me, maybe gets a little bit iffy. I'll end on Tesla. Already getting a little bit longer in the video than I wanted. 200 MA, again, was just death for this stock. Remember when they last reported their earnings, that was the support in after hours. It spent a lot of time chopping. We lost it. Retested, again retested. If we get through the 200 this time, then I think we could articulate back up to the 230s, 240s. But they're going to have to do a capital raise at some point for Solar City or just even to continue their own functioning. And shorts, in my view, are just waiting because they know that's coming. So there's no real risk in their view of the stock really completely taking off. I think if this Solar City deal wasn't here, I mean, this was a massive earnings beat. The stock should have been much higher. I think we'd be at all-time highs, but you got this terrible deal. 50, you have the 200 and 100-day moving average confluence. So if the earnings gap high of day is taken, the 213.17, then I think we're going higher. Anything below there to me remains iffy, choppy, and vulnerable. I like selling out of the money calls on pops and selling out of the money puts on moves down. I think this is just going to be sideways and choppy for a while. Anyway, that's my story. I'm sticking to it. If you're not following me on Twitter, my handle is @JustinPulitzer. If you like this video, hit the thumbs up. If you didn't like the video, hey, give me some love anyway, right? Leave some comments. I really appreciate the feedback. It helps me make the videos better. Anyhow, that's my story. I'm sticking to it. Let's have a great rest of our weekend, and we'll reconvene on Wednesday after the Fed decision, where I will tell you my take and do a Periscope video. Cheers.